Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld, counting you down to the closing bell, here to help take us beyond the bell. It's a global simulcast with Massar and Matt Miller. Welcome to our audiences across Bloomberg Television, Radio, and on Bloomberg Originals as well. Interesting shot, Carol, for our television audience as we came into you, as we look at the radio fishbowl that they trap you in with Matt Miller there. But at the top there, it really wasn't about stocks. It was about bond yields climbing, and that really does seem to be a big part of the story today.
Hey, it's like Jay Powell spoke or something. Yeah. In fact, he did for a second day in a row. And yeah, we certainly saw it play out in the Treasury trade. You also saw it play out in REITs today because they were definitely, the office REITs in particular, down about 3% as a whole, but names like Hudson Pacific, Office Properties. And basically he made some comments about, aware of the growing problem when it comes to commercial real estate during that congressional testimony earlier today. So that group and investors certainly noted that as well, Matt.
Yeah, for sure. So it's interesting to see that this the big rally that we saw at the end of last week, I guess investors were taking profits over the past couple of days, but they're back in it now as we approach the close, right? We're finally heading back up. We've been bouncing up and down, but stocks look like they're up about 1/3% on the S&P, the NASDAQ doing much better than that. So maybe this wasn't, a head fake the last couple of days. Maybe we're really going to see some gains.
But even still, you look at volume. We are down today about 12% versus the 20-day average on the S&P 500. So I don't know how much conviction there is to read into this rally. I'm not sure.
Well, just looking at a couple other measures, we're talking about a day where it looks like the VIX is going to settle below 13, if you can believe it. I know you're not a believer in that, Matt Miller, but how about Bitcoin? I know you're a believer in that. That's up again, about 0.8%, holding at that 30,000 level. Meanwhile, we do get the closing bells here in New York for U.S. equity markets, fastly ringing the bell there over at the NYSE and the Dow Jones Industrial Average, unchanged on the day. The S&P 500 up by about 0.4%. The NASDAQ Composite, that's your outperformer on the day, higher by more than 100 points, or about 1% on the day. And the relative laggard on the day, that belongs to the Russell 2000, which is going to close lower by 0.8%.
All right, Romaine. So the S&P 500 just eking out a gain there by the closing bell. Having said that, there's definitely a negative tone when you look at the index. About 324 names, Matt, to the downside here. 177 actually up on the day, 2 unchanged.
Yeah, and by the way, I want to point out the relative strength index. We're under overbought, so we're safe now. We're back at 65
for now.
For those of you who often track that index. Here you can see the gainers and losers on the S&P 500 in terms of industry groups, consumer discretionary stocks, communication services. So that's like the car makers, the home builders, and the streamers, all on the up and up today, as well as IT. The losers are real estate, energy, and financials, and those banks are leading the losses on the S&P 500.
All right, folks, let's get to some of the individual gainers in the Thursday session. Amazon, number 2 gainer in both the S&P 500 and the NASDAQ 100, finishing pretty much at its highs of the day, up about 4.25%. Loop Capital coming out and saying the stock could soar to $180 a share. So upping it from 140 was the previous target. Stock closing at 130.15. So some room to run certainly there. It also said, and this is on top of a more than 50% rally in Amazon shares this way.
Yeah.
Basically,
so it's 180. So the all-time high was 186, and that was like in 2021.
So it's basically saying it gets up to almost right to its all-time high. Basically, Loop Capital is saying that Wall Street is mismodeling Amazon's potential to improve its retail margins, saying some other things, but nonetheless, certainly kick to the upside. Ocado Group, they have ADRs that trade here in the United States. It's a UK-based online grocer, and some news came out earlier overnight and earlier this morning. This stock up almost 32% in today's trade. A report in the Times of London late yesterday that mentioned speculation of bid interest without saying where it got the information, cites some companies, including Amazon. So a little Amazon relationship there as well. But nonetheless, this name, when it traded in London, it was up the most in about 5 years. One more, Palo Alto Networks. This is number 1 in the S&P 500 and the NASDAQ 100 today, hitting a record high, higher volume versus what we've seen over like the past 20 days or so. And you remember on Tuesday, it replaced Dish Network in the S&P 500. Stock, Matt, is up about 80% year to date, and it gained about 14% since that news that it would replace Dish in the S&P 500, Katie.
All right, let's take a look at some of the decliners. I wanted to start off with JP Morgan, the shares falling there. There was some news. JP Morgan is going to pay a $4 million fine to settle SEC allegations that it mistakenly deleted 47 million records. Not sure if that's necessarily why the stock is down 2% today. Financials broadly down, but an interesting piece of news there. Also, NVIDIA, of course, the AI chipmaker darling. It's finishing just barely in the red. But I did want to highlight that, given that the stock is up close to 200% year to date. Not often that you see NVIDIA actually fall a little bit. And I did want to finish up with Darden Restaurants. We did get some earnings results. It was a mixed bag when it comes to quarterly comp sales. Actually, Longhorn, you had a slight miss. Olive Garden as well. Actually, I'm sorry, Longhorn was a beat, slight miss for Olive Garden. And then in their fine dining segment, actually, there was an unexpected decline. You add it all together.
Is Olive Garden the fine dining segment?
Apparently, it's
Have you never had the tour of Italy? It's pretty amazing.
It was lovely.
It's a little bit of everything.
Well, apparently people aren't really going there because, again, an unexpected decline in that segment, which I didn't know existed. You add it all together, shares off by about 2.6%.
There you have it from Katie Greifeld. No one goes to Olive Garden anymore. It's too crowded.
I like the Yard House.
Anyway, let's just get a quick check here on what's going on in the yield space. You hit it at the top here. That has been a big driver here on this day and really the week because of all of the hawkish talk by central bankers around the globe. Higher by about 7 basis points here. On the day for the 2-year. And what I think is interesting here is you're seeing that all across the curve. So your 10-year, 7 basis points, your 20-year, 7 basis points, 30-year, 6. So this is kind of a parallel move higher across the curve. And we saw something similar a couple of days ago as well here. So it's interesting that as the bond market starts to reprice in rate expectations, reprice in economic conditions, they're doing it all across the curve. And I do wonder what sort of signal that's sending about economic conditions.
And I do wonder when equity investors at some point just say, why should I take the risk at this point? Where there's so much debate about kind of where we go from here that if I look at the Treasury trade, right, and what I can get on a 2-year or what have you, why not plow money into that?
How much of this, though, is about central banks around the world? Remember there was the race to the bottom? Well, it seems to have turned around at this point, right? The Bank of England raised 50 basis points again today. The pound was trading for $1.28. Where is it right now? It's got to be right around there. So maybe investors were saying, why would I want to just get a measly 4.6% in dollar 2 years when I could go and get 5.1% in pound 2 years as that currency strengthens against the greenback?
It is interesting, to watch who can be the biggest hawk. I don't know, maybe we'll end up with a Bank of England terminal rate that's ultimately higher than the Fed. It'll be interesting to check when the last time that was.
But it gets to the issue, too. Obviously, these banks are just doing this willy-nilly. There is an inflation story there. We saw it, of course, with the BOE, just the day before. And you look at that resurgence in their core CPI numbers, a big part of the reason why you got that surprise 50. But I was just looking at some data crossing the terminal out of here in the U.S., and it was about that latest sale of Treasury inflation-protected securities tips. We had an auction Thursday. 96% of that was snatched up by primary dealers. And we talk about this idea that maybe people are coming back around to this idea that inflation isn't beat just yet. And so you do need those hedges. You do need that protection, even if you do want to, say, go after some of the riskier stuff in equity markets.
Yeah, absolutely. So maybe they're starting to buy Jerome Powell, what Jerome Powell is selling. Is that what you're saying?
Or maybe if they're not, and maybe not him specifically, Matt, but maybe they are looking at the data that the Fed's supposed to be dependent on, and they're saying that the data doesn't support pausing or even cutting.
Well, what's interesting, too, I think there was some kind of nuances, right, to what he said today, that whether it's 2 more, whether it's possibly 1, again, he's reminding us that they're going to be data dependent. He still believes that they've got to go higher from where we are.
I don't understand why Matt just didn't ask Jerome Powell this question yesterday at the Debt & Company conference.
I looked around there, and I got to say...
You were looking for him, weren't you?
Yeah. I all of a sudden, everybody at the Dead concert looked like, a Fed chair or a PE boss, or, there's
Seriously?
A bunch of old Wall Street guys there.
Like you, right? It's just a bunch of middle-aged guys.
Can I just tell you, Matt got tired standing. And
oh, my God.
Oh, my God, Matt, you're so old now.
I need to bring a portable seat. I need to bring one of those portable chairs.
Oh, you need some supportive sneakers. That really is.
John Mayer, by the way, had to sit down for the entire second set as well.
There you go.
Oh,
it's not just Matt.
Oh, my God. And the other guys, 70s, 80s?
He was in great shape. Bobby was doing great. So,
All right, guys, that's a wrap. Our cross-platform coverage on radio, TV, YouTube, and, of course, Bloomberg Originals. We will see you again, same time, same place, at 3 and at 4 p.m. Wall Street time.